Howdy, folks. Welcome to Liberty Call. Today is Wednesday, December 13th, 2023. Hope everybody's having a fantastical day out there. It is gray and overcast here in Colorado, and there are stupid people everywhere. I had to go to the post office earlier, and morons. I mean, again, half the population has an IQ under 100, and I think I was behind all of them at the post office. So anyways, hope you're having a good day. If it is your first time watching Liberty Call, if you could do me a favor, if you could give me some thumbs up, likes, shares, subscribes, follows, and press the notification bell. Let's go ahead and get into today's numbers. Things were jumping today after the Fed announcement. Let's see here. The Dow Jones was up 1.4%, 512 points, closed at 37,090. If the article is correct, that's the first time we've crossed 37,000. S&P 500 was up 1.37%, closed at 4707. NASDAQ up 1.38%, so all about the same. Closed at 14,733. The VIX was up 0.99% today. It's currently at 1219. Canada up 1.96. Brazil up 2.42%. And Mexico up 1.39. In Germany, they were down 0.15%. The UK up 0.08. France down 0.16. It seems like they were waiting on the Fed announcement because our markets were pretty much flat this morning. The Netherlands was up 0.11%, Spain down 0.22%, Italy down 0.15%, and Switzerland up 0.34%, and Portugal up 0.45%. Let's see here. Russian exchange is both green, MOEX up 0.41%, RTSI up 0.63%, and the Asian markets, the Japan, the Nikkei was up 0.25%, Australia up 0.31%. In China, the Shanghai was down 1.15%. The Shenzhen component down 1.54%. China A50 down 2.09%. DJ Shanghai down 1.25%. Hang Seng down 0.94%. And the Taiwan weighted up 0.1%. So, like I said, seemed like the markets that closed before the ours were just kind of sitting around waiting to see what's going to happen. And I guess when the Fed or Chairman Powell came out and said, we're leaving rates the same, although we did adjust the dot plots, and we'll get into that in a second. I think that's what really put the market into rally mode, not just equities, but commodities, gold, silver. They all were just jumping today. Let's see here. Let's jump over to commodities. We can look at this. See, crude was up over 1%. Let's see, natural gas up over 1%. Gold was up 2.4. Silver was up over 4.5. Copper up 1 1/3. So, yeah, I mean, everything was just jumping today. So, all right, let's get over to our market recap. Dow closes above 37,000. First time ever as Fed turns dovish. The Dow closed at a record high following the Federal Reserve's decision to keep interest rates unchanged while signaling potential rate cuts next year. The central bank's dovish stance estimating the benchmark rate to fall to 4.6% in 2024, with 3 expected rate cuts contributed to the surge in growth stocks, particularly in the tech sector, as Treasury yields plummeted. The dot plot indicating 3 rate cuts in 2024, coupled with the futures curve pricing in 4 rate cuts next year, resulted in an increased expectation for a March cut. The decline in Treasury yields inversely correlated with prices is anticipated to persist, fostering further gains in stocks through the holiday season and into 2024. Additionally, November producer prices remain unchanged, underscoring the disinflationary. It's not disinflationary. Well, yeah, I don't know. Disinflationary trajectory, basically just staying where it's at. Pfizer stock experienced a more than 6% decline after projecting 2024 sales significantly below previous estimates due to decreased demand for COVID vaccines and treatment. Well, most of y'all know my opinion on that. Southwest Airlines and Tesla also faced stock fluctuations, with Southwest shares dropping 4% following a fuel cost forecast increase, and Tesla closing 1% higher despite announcing the recall of over 2 million vehicles fitted with its autopilot system. Oil prices settled higher due to a more significant than expected decline in U.S. crude inventories, with a 4.3 million barrel decrease reported for the week ending December 8th. The Energy Information Agency's data revealed a substantial draw, countering several weeks of strong builds and contributing to a positive sentiment in the oil market. Yeah, these oil reports that come out, it's like, for a few weeks we've had, an oversupply and then now undersupply. It's like, it's back and forth and back and forth. And I don't know the explanation behind it. I'm not the one who who pulls this data. So I don't know if they're getting data from other sources, and then one source says they have too much, another source says they don't have enough. So I couldn't tell you. All right, next up, U.S. producer prices unchanged amid cheaper energy products. U.S. producer prices remain unchanged in November, defying expectations for a 0.1% increase. Well, 0 and 0.1 are not exactly that far apart. As cheaper energy goods offset a rebound in food prices, the report from the Labor Department, consistent with a sluggish manufacturing sector, suggests overall inflation could continue to ease. The unchanged reading in producer prices for final demand followed a revised 0.4% drop in October. Goods prices impacted by a 1.2% decline in energy product costs and a 0.6% rise in food prices remained unchanged in November after a 1.4% drop in October. The 12-month PPI rose 0.9% through November. Excluding volatile food and energy components, good prices increased by 0.2% and cost of services remained unchanged for a second consecutive month. The data aligns with a sluggish manufacturing sector, providing hope that inflation will continue to subside. This could influence the Federal Reserve's decision-making as policymakers wrap up their two-day meeting. Well, we already know the result of that. Despite inflation remaining above the Fed's 2% target, the more limited broad-based price increases may support the view that the central bank is done hiking rates. Financial markets are now anticipating a rate cut as soon as May, and the previous article said March, although a rate cut expectations were pushed back from March due to a stronger than expected employment report and slightly milder inflation readings in November. The narrowing measure of PPI, excluding food, energy, and trade services, edged up 0.1% in November, with core PPI rising 2.5% year on year, the smallest gain since February of 21. Core PPI has risen 2.8% or had risen 2.8% in October. So like I said, things are getting better. I mean, we are not having deflating prices. I mean, they're not going down. They're just not going up anymore as fast from a year ago. So again, be careful with, what you read and how you interpret it. All right, last titled Fed dots signal major dovish pivot for election year. This was, I guess, just comes from Tyler Durden. All right, in its recent policy meeting, the Federal Reserve signaled a more dovish stance than expected, with the dot plot projections indicating potential rate cuts in 2024. The median assessment for the appropriate pace of policy showed a target range for 2024 at 4.625%, suggesting 3 rate cuts up from the prior projection of 5.125%. The 2025 median projection dropped to 3.625%. With the median, with the 2026 median at 2.875%. This adjustment indicates that more Fed members now expect a softer monetary policy, with 11 members forecasting 3 or more rate cuts in 2024, compared to 5 members in September. The market had already priced in a more dovish outlook, with expectations for 125 basis points of cuts in 2024. That's 1.5% for your normal people, up from about 75 basis points or 0.75% at the last Fed meeting. This substantial easing of financial conditions since November reflected in the rally in stocks and bonds, and the decline in the dollar was noted by the Fed in its statement. While the Fed did not change policy rates, the statement acknowledged that inflation had eased over the past year but remained elevated, and economic growth had slowed. The decision to consider the extent of any additional policy firming suggests a more cautious approach. The outcome sparked questions about whether the Fed is front-loading its approach in an election year at the expense of 2025. Analysts are eager to see how Fed Chair Jerome Powell addresses these concerns in the press conference, especially given the significant shift in market expectations and the easing of financial conditions that the Fed had earlier noted as likely to weigh on economic activity. So, and here's the dot plots. Let me make that bigger for you so you can see it. So this is where we are right now in 2023. So you see all the dots right here at 5.5-ish. And then, so you see next year, you can see where the dot plots are as far as where they think it's going to range from 5.5 down to just under 4%. So, and usually it's where the majority of the dots are is kind of where your median range you're looking at. And then, so for 2025, you see that the range is probably in that 3.5-ish range, and then a little lower for 2026. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I shall talk to you next time. Adios.